I think we can go ahead and get started, and I'll just let folks in as they come.
All right, sounds good. Thank you all for being here this morning. I will make this brief. My name is Daniel Jones. I'm with East West Communities, also the current HBAR president. As we've all seen, there's been an acceleration of sales the last few months. In fact, we probably saw an uptick in sales pre-COVID and then hit a hard pause with the advent of COVID, and then surprisingly, sales continued to climb. That is somewhat tempered with the fact that materials and labor continue to rise, the most notable of which is lumber, which is why we're here today. It is my pleasure to introduce Jim Tobin. Jim, good to see you. And he's our industry's chief lobbyist in DC. And David Logan, David, good to see you, who is NAHB's lumber economics guru. Wow, is that his official title, Dale? Economics guru, lumber, all right. Jim is going to lead the discussion, and then we're going to turn it over to David. Earlier, if you have questions, please submit your name via chat, not necessarily the question, but your name. And then at the end, Dana will call you out, and Jim and David will field as many as we have time for. Before we get started, I wanted to thank our HBAR Cornerstone Club members who've made this meeting possible. The Diamond Investors, Cornerstone Homes, Town Bank, Wells Fargo, the Platinum Investors, Columbia Gas, Costin Floors, Lifestyle Home Builders, Main Street Homes, Premier Insurance Builders Mutual, RCI Builders, and Zan's Refuse Service. And finally, our gold investors, which you can all see on your screens: Behringer Builders, Cross Timbers Roofing, Dominion Energy, Ferguson Enterprises, Fulton Mortgage, H.H. Hunt Communities, Mitchell Homes, MSI, Virginia Natural Gas, and Weyerhaeuser. Thank you, Dana. Some very quick intros. Jim is responsible for directing the federal, state, and local lobbying, as well as political activities for HBAR. In addition to his lobbying responsibilities, Jim guides the activities of NAHB's Build Pack and the Grassroots Network. Jim joined NAHB in 1998, and before becoming NAHB's chief lobbyist, was NAHB's vice president for federal relations. Prior to that, Jim was senior legislative assistant to former U.S. Representative Frank Riggs from California and former U.S. Representative Gary Franks from Connecticut. David is the Director of Tax and Trade Policy Analysis at NAHB. There's his official title. Prior to joining NAHB, David served as Chief Economist for the U.S. House of Representatives Ways and Means Committee, Senior Economist for the U.S. Congress Joint Economic Committee, and Economic Policy Advisor for the House Budget Committee. David has also held economist positions at notable think tanks such as the Brookings Institution and Tax Foundation. Jim, with that concludes my intro. I'll turn it over to you.
Great. Good morning. Thank you very much. It's great to be with you. And I prefer lumber guru for David as well, other than the long title that he has. But I'm glad David is here this morning, and no one's been working harder on this issue than David. And so I'll give you the kind of the political background and where I see things, and Dave, of course, will dive into the numbers about where we have been and where we're going. And David and I are just, part of the lumber team, so to speak, that's been working on this issue now for, God, it seems like years. If you remember, in 2018, we had the initial run up in lumber prices in the spring of that year, and they had hit the unbelievable price of, I think, right around $550 per thousand board foot, or per million board feet. And that was something we had never seen before. We had activated very quickly in those days to work with the administration and Congress to talk about the issues that were underpinning that run up. And both it was from a production issue in the domestically, but also our trade with Canada at that point was something that needed to be taken care of. We get about a third of our lumber from Canada, and we have something called the Canadian Softwood Lumber Agreement, which is separate from the NAFTA agreement. Remember, President Trump renegotiated the NAFTA deal over his term, and the lumber remains separate and outside of that, and yet unresolved is an issue between the two countries. And while that is something long-term, and I don't think the Biden administration is going to take up any trade deals in the short term, the issue we have now, which really started, as you mentioned, Daniel, it started right after the COVID hit just a year ago. We saw the markets, all of the markets tank early on in March and in April, including the housing market, and then somehow defying gravity, the housing market accelerated out of that dip and into these unbelievable production levels that we've seen pretty much for the last 10 months. The problem is that lumber never kept up with it. They made a gamble, in my mind, a year ago that housing, like the rest of the economy, would crater. And so they pulled back production and have never been able to recover from that. And so from our part, starting in really, I guess, July of last year, when we saw the spikes in lumber really start to ramp up, working with the Trump administration and Congress, we were pulling out all the stops to point at the housing affordability crisis that the lumber crisis was causing in the markets. While yes, we were proud to know that our industry had been deemed essential and had been working pretty much from day one, and even the lumber industry was deemed essential by the federal government. That was one of the key things we did early on in the pandemic to make sure that we weren't sidelined. Now, were there states across the country where they shut everything down, like let's see, Vermont, Michigan, Pennsylvania, Washington State? Yeah, there were some out there, but by and large, 45 of the states kept moving right along. Virginia being one of them, and the lumber industry largely, in some of those states, there's a pretty big timber and lumber industry. But by and large, the lumber industry and timber industry should have kept rolling along and meeting the housing demand that was clearly outpacing anything anybody had thought of. So over the summer, we really started engaging the administration. And this is not, in my mind, a trade issue. Yes, there is a component of this that would be great if we could get a long-term deal with Canada. But for us, this is about just mill production not meeting the demand of housing, and what could the federal government do? And that's where my role is. What can we do other than shouting from the mountaintops in the press? But what could policymakers in Washington D.C. do to alleviate the pressure on the mills and more importantly on the home building industry? And so we met with Commerce Secretary Wilbur Ross at the time. We had a meeting with him. Of course, everything was virtual in the fall to talk about the mill issues. He's always been a champion of housing. He understands housing. He sits on a couple of housing boards. And so he's always been a good friend to us, or was a good friend to us now that the administrations have changed. He's now back to just counting his billions of dollars. But he had agreed to look into the cause of it. Was it the lack? Was it shutdown orders? Was it capacity? Was it production? Was it mask mandates? What was keeping the mills from being able to keep up with demand? We also engaged with the Trump White House at that time, the National Economic Council, because at that point, housing, and even until this point, housing is the one bright spot in the economy. Now we're starting to come out of that. But housing generally was the only thing keeping the national economy buoyant during the depths of the pandemic. And so when lumber prices get as high as they were and have continued to accelerate past that point in the fall, then for us, it really became an issue of housing, not only housing affordability, but would this begin to slow the booming housing? Would people start pulling back from sales? And the answer is generally yes. We have heard, and from our members across the country, that buyers are walking away. We've heard the stories of you all, the members, who are under contract with a buyer having to eat these lumber prices, which are preventing you from starting the next project. Appraisals have been a real issue where we can't even get the house to appraise for construction costs, and banks again refusing to lend for the next phase of a development or a next project that you have. So for this is affecting every point of the market. And now, and unfortunately, the recent acceleration of prices have hit right in the middle of the transition to a new administration. In a lot of ways, it would have been easier if President Trump had won, because you have the same cast of characters in through December and January and February. That was not the case, of course. And now we've got a new set of folks in Washington, D.C. who are running the show. And they have been slow to gain speed and put the right people in places for a variety of reasons. Confirmation hearings are clunky and slow. There, of course, is that issue of the pesky impeachment trial that slowed everything down in the United States Senate for a couple of weeks. So now we're really just starting to see the administration start to fill out. And that's really only at the top levels. They are still understaffed in the White House. They're understaffed in the Commerce Department. But nonetheless, we are reaching out there into all of those institutions, trying to gain the foothold that we can. Specifically, we've talked to the president. I've talked to the White House at several occasions over the past month and a half on this issue. We're engaged with the Domestic Policy Council. Now, they're not necessarily focused on lumber, but they are really focused on housing. And they're focused on housing opportunity and equality, something that Joe Biden ran on. But right now, you're talking about $24,000 of added costs because of the lumber crisis to the cost of a home, $9,000 to the cost of an apartment right now. And if you're trying to get people into homes and create opportunity for more people to own or rent and not spend as much money of percentage of their income on housing, this is then you need to solve the lumber crisis. So we continue to work inside the White House to get them not only to pay attention to the issue, but to do something about it. Last week, we led an effort with over 35 other housing organizations, all the way from the housing advocates who are working on low-income housing, all the way up to the home builders, the realtors, the mortgage bankers and finance, and even our friends at on the commercial side, all joined with us on a letter that we sent to newly confirmed Commerce Secretary Gina Raimondo. She's the former former governor of Rhode Island. She has a great relationship with our builders from Rhode Island. They worked with her on workforce issues. She understands the industry. So that letter went up last week, and we are hopefully going to be able to get a meeting with her in short order. Is the Commerce Secretary oversees industry and business in America. And this is something that she needs to take particular attention to, because again, if we keep these lumber prices where they are unabated, eventually the housing market is going to crater. And if you believe that housing has been the one bright spot and will continue to lead the national economy out of this recession, then nothing will stop that faster than lumber price. And that's my big fear. If we continue on this path for months on end, at some point, everything's going to pull back. And then what do you have? You have an economy that's still struggling to recover from the retail side. We all know the stories, restaurants. I'm up inside the Beltway. So for me, it's a little tighter up here. I was just down in the Richmond area over the weekend, and things seem to be a lot looser than they are up here for now. But generally, the rest of the country is kind of waiting with bated breath to see if we can actually get these vaccines in people's arms and live up to Joe Biden's hope that everybody who wants one will get one by May, and by the 4th of July, we'll all be celebrating with friends with picnics and backyards and things like that. So we continue to press the government. We are going out with a grassroots alert this week. If you haven't seen it already, it'll be hitting your inboxes. I encourage you to take a couple minutes and run through the link and send your member of Congress a note about lumber prices. We've got a letter already keyed up for you. You can send your own letter. But Congress, again, a brand new Congress, again, unfortunate timing, but a brand new Congress. They are well aware of this. We have members of Congress who are very interested in the price issue and what's going on here, because again, housing demand hasn't really dipped at all in the last year, and yet we continue to see lumber prices continue to escalate and demand not being met. So we are working as hard as we can on this issue, and I would encourage you, if you've got some idea that we haven't thought about or some angle we haven't thought about, please let me know. We're looking for every nook and cranny to make the case to the administration about finding out what they can do to alleviate lumber prices. So with that, I'm going to stop there and turn it over to David, and he'll talk about the economics of the situation and kind of where we're headed. So David, please.
Sure. I hope everybody can hear me. I'm gonna share my screen. Can you see that, Dana? Okay. Thanks, Jim, and thanks everybody for having me. I am gonna spend less than 10 minutes kind of going over where the lumber market currently stands, a little bit kind of how we got here, and as much as I can legally say about where I think it's headed. So just to put everything in context, this is framing lumber prices going back to 1995 as kept by Random Lengths. These are nominal prices, so there's not an adjustment for inflation. But the high, as Jem mentioned, the prior record that was set in 2018 was 582 per 1,000 board feet. 2020 had already shattered that, and obviously in 2021 we're unfortunately well above even last year's levels. And I did the math yesterday. I think that lumber to come back below last year, already lumber would have to run at something like for an average of $300 or $400 per 1,000 board feet every week for the rest of the year. So that's not a forecast, but that seems awfully hard to do. That said, this market drops like a rock when it does drop. In the context of all building materials prices, and this is important because we have, you all have certainly experienced a few other materials prices hitting your bottom line increasingly over the last month or two, I'm guessing, and obviously over the last year with supply chain issues we've dealt with quite a few. Materials prices writ large are up 8% from about a year ago, more than quadrupling inflation. That's not including energy prices, just because they're super volatile. The BLS loves to include energy consumption as a building material, so I stripped that out because the data make a lot more sense when you're talking about building materials without talking about diesel fuel, as important as it is. Prices generally up 200% since April, so it's actually 199%. They've about tripled over the past 10 months. They're already 10% higher than the previous record that had been set back in September, before we saw something like a 40% decline in prices. The volatility, anytime I talk with a reporter, there's certain things that I hit on if they don't ask me. One of those things is, they all want to know what's going to happen this coming year with regards to builders. How are they gonna, is any behavior gonna change? And I always point them to this volatility issue. Prices, high prices are a huge problem, and they're much too high right now, as such a significant portion of materials costs building a home. But the whiplash from the volatility week to week, month to month in prices is what builders told me going forward was something that they're really going to have to guard against. And your suppliers are doing the exact same thing also, in kind of hedging against the downside there. I like to keep track of 2x4 prices, number two and better, as kind of a bellwether of where the index might be going. SPF and Southern Yellow Pine. I know y'all use quite a good deal of Southern Yellow Pine, but there's a decent mix, I think. One of the reasons that I find this kind of instructive, not only does it show you that since Thanksgiving, prices have doubled, but you can see that SPF tends to move about 2 weeks before Southern Yellow Pine. Last week or 2 weeks ago, SPF stayed flat for the first time in quite a while. And I was hoping that this past week that would happen with Southern Yellow Pine to kind of indicate that maybe there's a little leveling off possible in the near future. And sure enough, that's what happened. Southern Yellow Pine 2x4s decline. Other dimensions did not decline, but this is the best kind of leading indicator that I've found, and that includes the futures market. The tariffs on Canadian lumber, they've hurt our market and what builders are paying, but they have hurt, obviously, increasingly more the further north one goes to the market. So you know, when I talk to a lot of our members in the South, they wonder why we ever even mentioned really the Canadian tariffs, because it doesn't have any effect. Seemingly, there seems to be no correlation about like tariff rates and being imposed and what's happening to their costs. That flips 100% when I speak with builders in the North, and that was the case last week when I talked with our New York members who wanted to know everything about the tariffs. In addition to the tariffs being on, they got cut in half late last year, which was good. But the dollar has just lost a ton of value since spring of last year, and that isn't great for inflation, obviously, but particularly it makes the real cost of Canadian lumber even more. So even though the tariff got brought from 20% down to about 9%. Over the past 10 months, real prices for lumber, regardless, are up 13% more than they would be without this change in the exchange rate. This is a graph of lumber futures and its weekly change since the beginning, or since last March, and I only have it on here because, like it says, lumber futures haven't proven to me to be a reliable leading indicator all the time, and it's got many reasons for it, a lot of which have to do with futures themselves, which is another thing that I try and tell reporters, or when I've been fortunate to be in meetings with some high-ranking government officials that have raised the point, why don't your members use the futures market? We know there's a futures market, everyone else. Well, you know, for our market, it's not like airlines hedging on oil costs, or corn futures or anything like that. Hundreds of thousands of trades are made in those markets every day, whereas a huge day in the lumber futures market features 300 or 400 trades. So this is a lot less liquid. And then I kind of tell people what a lumber future actually is and what it entails. If one of our builders were to, you know, quote, hedge by buying one lumber future, they'd be buying 110,000 board feet of lumber all at once, so they need a place to keep it all. That is exclusively made up of 2x4s, and it has to come from mills in a handful of Western U.S. states or a couple Canadian provinces. So for us on the East Coast, it's really a meaningless market for all intents and purposes. And structural panels, OSB had been climbing the most of any, but this obviously isn't just a dimensional lumber issue. The structural panel composite index that Random Lengths keeps, That's up 150% over the past year. And OSB, if you go back a little further than a year, back to the beginning of 2020, OSB has almost quadrupled in cost. So steel, I want to mention, just because steel mill products prices are up about 20% since November. This is something we have heard an increasing amount from our members about. And then just other building materials. As you all know, it's almost ubiquitous across products. Prices have gone up, and they've gone up by more than inflation, and hopefully we'll see that come back down. With regard to what might be in store for us, I think the vaccination rate is key. The safer people feel to go back to work, the more people can go back to their work at mills, which, according to the mills, has been one of their chief problems. And employment in the sawmill industry was down about 3,500 jobs over the year from in 2020. So vaccination is going to have a lot to do with it, and just churning out production. Fortunately, U.S. mills increased production a pretty good deal in the last couple of months of last year. We then got the market then got kind of hit in the face by the winter weather that had federally declared disaster areas in Texas, emergency areas Louisiana, Alabama, and there are countless sawmills and timber operations, neither of which could operate for a week or more on a staggered schedule when those hit. So I'll stop there and stop sharing my screen, and we can go from there.
Hey, David, maybe touch a little bit on the do-it-yourself market and the big box stores. That's been another story of this as well, hasn't it?
Sure. So the genesis of all of this lies within COVID, as does everything. As Jim had mentioned, the mills made a couple critical fatal errors when it came to production forecasting. And one of those was not foreseeing an increase in do-it-yourself demand, which, to be perfectly frank and give them their due, no one really foresaw that coming strategically. But it increased a ton, which increased demand from the big box retailers, who hold a lot of buying power, and that put more wood on allocation, taking away from regularly traded and bought lumber for your local supplier, distributor, et cetera, for you all to actually place orders for. The same has been true of remodeling jobs, especially outdoor ones, and a lot of that has to do with the stay-at-home orders that were in effect last year, but also every time people get rebates, and some people who get unemployment checks have used it for those purposes, and people who took advantage of forbearance in their mortgage and the terms that kind of were set forth in the CARES Act and other regulations. There were quite a few people who didn't have to do that. And in my opinion, a lot of that money also got diverted to projects around the house, all of which is to say that people were buying a lot of stuff from Lowe's and Home Depot, including me, to be perfectly honest.
Yeah, and Dan, just to kind of put a bow on it, I mean, one of the things that we'd like to see, and this is in that letter that I mentioned we sent to the Secretary of Commerce, and same thing with the letter to President Biden, is about kind of taking a look at the lumber supply chain. Is David said, it's not just lumber, and everybody on the call knows this. A lot of the supply chains are really constricted for any one of the things, but lumber being the biggest one and the biggest cost factor for production of homes. But one of the things is trying to examine what are the issues that we can help with, if it's vaccines, if it's stay-at-home orders, if it's N95, what would it take for the mills to ramp up production, of course, safely and as quickly. We want to be part of that. We want to help make calls for that as much as we can, and try to do whatever it takes to help make the mill production increase. So that's one of our asks again with the Commerce Secretary. Let's examine the whole from cutting a tree all the way till it gets framed. What can we examine the whole supply chain here? And President Biden is trying to do that. He had an executive order about 3 weeks ago asking his entire government to look at the supply chains under their purview. And David Logan drafted a great letter that was sent up by our chairman of the board, Chuck Falk, yesterday to the Department of Agriculture, basically laying out the scenario as they go through this supply chain review in the agricultural department that lumber needs to be in that mix as well. So we're kind of no stone unturned, trying to find every nook and cranny, like I said earlier, to figure out how we can relieve these supply pressures.
Thank you, Jim. Thank you, David. Dana, I think this is the time that we're going to field questions, if any. And I see we've got a couple things in the chat box.
We got Scott Goldman. If you want to unmute yourself.
Yeah, I've seen a lot of, I've been talking with my grading contractors and stuff. And, of course, a lot of those guys will clear lots and take the trees to the mills and stuff. And they've gotten to the point where they're not even taking them to the mills because the mills, it's not worth their time to run them to the mills, So it's kind of a strange effect that they're not even being able to sell their their raw lumber to the mills just because the mills aren't accepting them because they've got so much. And I've also talked to a couple of the loggers who have said, we've moved on to different businesses because we can't get rid of our logs. It's a strange situation with that. So.
Yeah, Scott, I'd be curious. Is it because the mills have more logs than they know what to do with, and they're meeting orders, or they're just managing production?
I think they're managing production. I think they also got more than they can handle, and of course, with the mill shutdown and stuff, they just couldn't run as much lumber either. So it's a lot of moving parts in that, as you know, but even some, like I said, even some of the loggers, have gone on to taking their equipment and are clearing and grading and stuff, and versus logging.
Right. Yeah, I've talked to the loggers, the North Carolina loggers and Maine loggers in particular, but also the large national organization, and they're frustrated too. I think they've, a lot of demand for what they do is also from the pulp industry, and pulp is way down because, frankly, there's not a lot of people in offices these days printing out reams of paper. I heard a story in North Carolina. There's one mill that's totally dedicated to creating the little cash register receipts you get at restaurants and things like that, except no one's going to restaurants, at least for the last year. Obviously that's changing. Now, if you go to CVS, plenty of cash register receipts at CVS, but that's not enough to keep that mill open apparently. But anyway, so that's one of the challenges too, is that other parts of the wood market have crashed, and therefore it's really only it's kind of the dimensional lumber right now, and that's kind of keeping prices are artificially low, at least from the loggers' perspective. So we're talk to those folks as well. But thank you, Scott.
We've got Vanessa Poe had a question.
Yes, thank you, Dana. Just this past week, we received notice from one of our suppliers that they're going to start allocating a set amount of building materials to our company or in the projects. And I was just curious to see if you thought that was something that would help decrease the spike, or any information you have going forward on allocation of materials.
Allocations are becoming more and more and more common, and that that's more of a symptom of bad a bad supply chain situation than it is necessarily a forecasting of what's to come. And you know, I have lumber, of course, being the chief material on that's always on allocation to some extent, but that it's increased. One of those reasons is that there's simply, as you know, there are many times now where you can't even get a lead time if you're just a cash buyer of lumber or a supplier. So they'll take whatever they can get. And there was a point in late 2020 where not only were people buying lumber, this is mainly middlemen. Not only were they buying lumber without knowing a delivery date, they were buying it without knowing a price. They just bought it without a price being written in and said, we'll take whatever we can get, charges what you will when it comes. So allocations now, they started hitting like doors and windows last year in certain parts of the country, particularly around Louisiana. But allocations are being put back into place in a lot of places with regard to windows right now. Sherwin-Williams is having to deal with a paint situation because they haven't been able to recently source some of the chemicals that they use to make certain colors of paint. So if you haven't seen it yet, you will see a reduction in the number of offerings of paint finishes, et cetera. So those allocations, unfortunately, are kind of the opposite of, I think, what you're looking for, more of a symptom of things just being really bad. And one of the things that suppliers who are also getting crushed and have been getting crushed during this whole thing also, they're not making money hand over fist because they're getting squeezed on the other end. But one of the big issues for them has been, as it has been with builders, customer relations, and how do you deal with your customer relationships during periods of escalating prices. And putting people on allocations is one of the things that they're trying to do across the country to help keep some of their most important segments of business and at least keep them happy so that they don't wind up with nothing at the end of the day and have to pause a project.
We have a question from David Oman.
Chairman David, thank you for the presentation. If I understand all this correct, it's a simple supply and demand issue. So is there truly, and really I think you have to split lumber away from OSB. And I think lumber, like you said, when it crashes, it'll crash, but I don't see any end in sight for OSB. Is there truly capability out there, capacity out there from the OSB manufacturers or the lumber manufacturers that can increase supply? And I appreciate all the lobbying efforts, but are there government regulations that are in the way of increasing that supply? And if not, is there really anything that can be done from the government standpoint?
Yeah, David, you hit the nail on the head. You're right. I actually had one builder suggested that the federal government open its own mills, and you know, the last time I checked, that pesky thing of capitalism kind of gets in the way of that. But that's how desperate we are if we're actually thinking about government mills. I think a couple of things to your question. it is a capacity issue, and so what we want to do is we just want to see the mills operate 100% capacity. If they can run 3 shifts, run 3 shifts, and I know obviously labor is an issue, and safety, of course, but that's what I think is going to fix this. You're right, it is ultimately a supply and demand issue, and we just think the industry has been a little bit slow to meet the demand of the housing market. So one of our challenges is trying to at least convince, and we've been trying to do this, for 10 months now, convince the lumber market that the housing boom is here to stay, that you should meet production demands, because interest rates are low, even though they've crept up over the last couple of weeks. Interest rates are still historically low. The demand is high. We're not producing enough homes for the people that want them. So this should continue to churn, at least the housing market for the next year, at least. So there's reason for the increased production. I would say that one of the things that have been suggested is the Defense Production Act. We saw President Trump invoke that early in the pandemic for meat production, or like I said, the meat packing industry. We saw it for ventilators and N95 masks. So that's something that I think we can look at. It's very difficult. Usually the Defense Production Act, at least the research that I've done, you get Ford Motor Company starts making ventilators, right? They've got to. You can't ask Ford to start making dimensional lumber, right? They don't have the saws, right? So it may not be a 1-for-1, but there may be mechanisms under that. So we're going to talk to folks about that. The other one is, and I don't know if anybody's thought about it, we've got more members asking about steel. We've got members that are starting to use steel. I've reached out to the steel industry to have a conversation with them. Maybe it's time to have a conversation about the industry shifting to steel framing. And I know that comes with a whole host of training issues and how you use it. But if these prices stay high enough, then steel starts looking really attractive as an alternative. And then the last thing I'll mention, David, what the government could do is, one, continue to cut more timber off the national forests. That is an important source, especially out west for those mills. It's a good employment opportunity for the mills out west. But we have a national forest system for a reason. That is to provide a long-term renewable source of timber for the United States. And since President Clinton came into office, they've been treated more like national parks than national forests. And President Trump increased production and harvest off of them, but not enough to really truly meet demand. So that would be something that the Biden administration could do: continue to manage our forests so they're healthy and they avoid wildfires, but also create more timber for production. And then the last one is continue to look outside our borders. Canada is our best trading partner when it comes to lumber, but there are other countries that import lumber to us, and David knows. Can even delve down deeper if we need to, but Sweden, Russia, Chile, getting other countries to import their lumber to us in larger numbers. Now, it has to be graded the right way. We've got high standards for the lumber that we use, and we certainly don't want to see poorly graded lumber coming into the country. But we have to look at other alternatives outside of U.S. production to meet the demand.
So, Jim, is the demand issue a restraint at the mills or a restraint with timber? I thought the main restraint was at the mills themselves. So if you get more timber to the mills, how does that help?
We believe it is the mills. That's where the constriction point is. But nonetheless, I think it's, if we continue to cut, you can stand up more mills, certainly in the West, if they have a line from the national forest of logs coming in, if that makes sense. A lot of mills have been shuttered over the last 10 years. I think that you can start these rural communities to get their mills back going up, at least to higher production levels, if they've got a steady supply, certainly coming off the national forests.
Jim, you've worked with a number of administrations. Do you have a sense of how aggressive our Biden Secretary of Commerce, how aggressive she will be, and what sort of activities she's indicating she will ramp up here quickly to convene with stakeholders like our industry?
Yeah, I suspect that she's, if the confirmation hearings were really focused on China, that was the one that's the big shiny object in kind of the business community, whether it's intellectual property or just outsourcing overseas. And then given, of course, the last 4 years under the Trump administration, the tensions with China in general, But this is an issue that I think is going to, that will grab her interest. And I say that because of our relationship with her when she was governor of Rhode Island. She really understood housing, certainly labor supply. That was where she worked closely with our members. But I think this is one where she can have an immediate effect and be shown to working something that's really having an impact across every state. This is not a regional problem. This is every state, every city, every county is affected by these lumber prices. And it's reaching crisis proportions, especially when you have an administration, and this is where the White House comes into play. They have been focused. Housing is one of the issues where they want to provide more opportunity and equality for people. Joe Biden even has a $15,000 first-time homebuyer tax credit proposal, which we like. But if $15,000 doesn't even cover the cost of the increases on a home because of lumber prices right now. So if Joe Biden wants to do something for housing, one of the ways he can do this is getting to the root cause of what's causing these price spikes and finding ways to help the mills with more production, whether it's training for more workers, whether it's vaccines. Like I said, if the answer is we need our workers vaccinated tomorrow, I'll do everything I can to get them at the top of the list in every state across the country. So that's what we're hoping the Biden administration pays attention to, and we're starting to get a little bit of traction there now.
Jim, do you have a sense of the lead-in time for getting those employees vaccinated, what it will take in order to get them, vaccinated and then lumber on trucks? Is that a 1 month period, a 2 month period? Is there any concern about that labor force not being as willing to participate in vaccines, or what does this look like? Yeah,
that's a great question. So we all know there's the 2-shot regimen, right? That it's what, 3 weeks between the first and second shot, and then 2 weeks later you're really fully vaccinated. The Johnson & Johnson shot is now out. That's a 1-shot deal, and so I am optimistic that more shots are coming. Certainly Virginia is one of those states. Seems like it got off to a very slow start, but we're catching back up to everywhere else. My sense is that it's a combination of vaccine and continuing to wear masks. That's what Joe Biden has said. It's my hope that you're right, that there is a kind of reluctance by some segments of the population to not get vaccinated. We believe. And we're going to join. The Biden administration is getting ready to roll out a big vaccine push. We're going to be part of that. We think it's critical for everybody, and I would make this case to you on the call and your employees and your work. Get vaccinated. That's the quickest way to get past this, just from a societal perspective, but also from an industry's perspective. We were very fortunate in the early days of the pandemic to show to the government that not only was home building essential to the American economy, but that we could do it safely. We held 2 stand downs for safety across the country and helped to make our case that we were going to be smart about this, that we could still continue to produce safely. The vaccine is the next step in that evolution. The Department of Labor under Joe Biden's administration is looking hard at a COVID workforce safety regulation. That may be mandatory masks, it may be mandatory distancing, it may be a lot of mandatory stuff. If we can get vaccinated and show that our industry is doing the right thing, hopefully we can avoid some of those mandates, because yes, they are going to regulate under this administration for the next 4 years. So we need to do our part to try to ease those regulations as best we can. And I think the vaccine is probably the most important thing we can do in the short term.
Do we have other questions? I'm not seeing any more come through the chat. Jeff?
Yeah, I was, my question's for David Logan, actually. Since it's all sort of boiling down to supply, how much of that is capacity constraints of the existing mills? And then even if they were to go to 100% capacity, how long does it take us? I mean, you mentioned how long lumber prices, how low they would have to drop to get back to normal. How long does it take, even at 100% capacity operations of what we have in place, to sort of get us back to a real lumber price? Or is that adding mills, adding production?
Yeah, so that I'll speak to the latter point first. The greenfield mills coming online, that's a huge issue. That would go a long way, increasing the capacity. Like you said, they're not running at 100% capacity. Hardly any manufacturer does, frankly. However, their capacity utilization rates are usually, in really good times, are about 95%. If they went to 100 or above 100, which they could do, that would serve to close a gap pretty quickly. But by pretty quickly, kind of as you allude to, that would be kind of talking on the order of 6 months, not 2 months. So it's a lengthy process, but first, before even opening any new mills, we need to get them to crank out all that they can using the capacity that they currently have. But in that situation, prices come down gradually but steadily. That's generally not how this particular market works. And one of the other things that's keeping prices high and has kept them high is the crazy volatility, has people buying as soon as they can possibly buy, even without knowing exactly where it's going. So there's a decent amount of strategic hoarding that's gone on during the pandemic too, by various end users of lumber. And the more stable an outlook, the more certainty there is with public policy too, and with vaccinations, all of that plays into kind of a lessened amount of stockpiling, which would also go a long way to help bring price levels down.
Well, do we have any other additional questions? Daniel, I think we're just at about the 1 hour mark, so this is probably a good time to thank our guests and close up.
Perfect. Jim, David, thank you very much. We appreciate your time this morning, and hopefully it'll all get resolved sooner than 6 to 9 to 12 months, but in all likelihood, we may be in this pickle for a while. So we'll continue to fight. Thank you for what you do, and thank you all for joining this morning.
Thank you.
Thank you.
Thank you.
Thanks, everybody.
Thank you.